Hello and welcome to this week's crypto update. So, what's been happening this week? Well, of course, on the headlines, as per normal these days, is Trump, and Trump has set new tariff dates. So, originally it was April the 9th was the deadline. Then there was a 90-day extension given, which brought us to just July the 9th, just yesterday. And now they have been extended again, moving to August the 1st. Initially, he said this date will not be moved. Now it seems already there might be some flexibility about this, but the market has taken this as being bullish. And of course, we've seen Bitcoin hit an all-time high yet again, hitting 112,000. Why is the market bullish about this? Because it has taken volatility that was seen to be potentially in place around what would happen if countries hadn't made agreements with the US, and what the tariffs might be, and therefore what the outcomes and the risk that might be to the markets and the economy in general. So now this volatility has been pushed off. It's not gone, but it's been pushed off to a later date. In the meantime, markets have been bullish. The S&P has risen. Like I said, Bitcoin hit an all-time high, and it's seen as being very positive for now. What does it mean? Well, countries now have until August 1st to finalize trade deals before sweeping tariff hikes kick in. That unexpected delay has done two things. Number one, it's eased fears of immediate volatility, pushing off volatility for another day, and it's injected confidence back into risk on assets. So risk on assets have responded positively. But of course, what this actually does is it puts the volatility off to another day. But also, one of the key reasons that the Fed are stating that they're not reducing rates, despite the fact that they can now see some weaknesses in the economy, in the jobs market, which is one of their factors that they would use to judge whether they should reduce interest rates or not. That and the level of inflation. And of course, inflation has been dropping consecutively for the last 5 months now. It would appear a lot of things are lining up to allow the Fed to reduce interest rates. Well, one of the things that is not allowing to do that in their own eyes is the fact that they don't have clarity on tariffs and the potential that those tariffs could create inflation. And of course, they don't want to reduce interest rates in the interest of helping the economy, but at the same time, then create inflation to spike yet again on the back of what would happen from the tariffs. So all what we've done here is we've taken the volatility for now and moved it to a later date, and also has probably kicked the can down the road as to when the first rate cut might come into play. So what have we heard about these rates? Well, they came out and announced for 9 different countries rates anywhere from 25% to 36% for the 9 countries on here. And then just yesterday, they came out with a whole raft of other ones ranging from 20%, mainly 25% up to 40%. The positive on these is when these were announced, there was no real negative reaction to any of the risk on assets. So it appears that some of the volatility that comes with these, is taken off the table in general, because while it was a massive shock when they were originally announced, that shock certainly has dissipated, whatever happens with them now. And so while they've only done deals with actually 3 countries, and those deals are pretty loose as it is, it appears that potentially that huge shock that might come from announcements of what happens with tariffs mightn't be as big as it might be feared. But still, that volatility is there, and it certainly is potentially tying the hands behind the Fed's back a little bit. So these tariffs are set to go live on August 1st. President Trump says any retaliation will be met with increased tariffs. So in other words, if someone goes, well, you've put 25% tariffs in our country, we're going to put 25 in yours. Trump has already forewarned, so well, if you do that, we'll go even higher. So he's trying to preempt that, because that is actually what happened in some cases before. Another interesting story that came up this week was 8.6 billion Bitcoin whale transfer shows no sign of sell-off. So blockchain intelligence firm Arkham said in a post on Friday that there are no indications that the 8.6 billion Bitcoin whale transfer is leading to a sell-off. So what happened here? So there were 8 wallets with exactly 10,000 Bitcoin in them each. They have been untouched in 14 years. They were originally bought for a combined, between the 8 wallets, each with 10,000 Bitcoin in them, combined value at that time was something over $200,000. Current value today, $8.6 billion. So not a bad trade from that person. But there was a lot of speculation that all of a sudden, after 14 years, without any movement from any of these 14 wallets, all eight of them moved. and moved in one go. So they were all moved in pretty much the same time. And so the speculation was this person has suddenly decided, okay, I've got these wallets, I've got access to them, and now I'm going to sell. That doesn't appear to be happening. And so then there's two theories out there. Number one is that whoever owned them, because they're really old wallets and the original wallets didn't have the best level of security, that they got hacked and someone has actually taken those and moved them into a wallet of their own, or someone that had those wallets realized the security was no longer at a high level and they themselves have moved them into a safer wallet. In any case, it appears it's not going to cause sell pressure, but interesting nonetheless, and a very nice trade by somebody 14 years ago and someone that has held through all the ups and downs along the way, but certainly now has huge value in place. So what else? Well, ETH season. So again, we mentioned ETH along, going back since before Christmas, we were saying when ETH was going steadily down and most of the media and Twitter and everything else, the field towards Ethereum was very much in a negative space. But the more it went down, the better value we felt it was going to be. And when it went under $1,500, we said, okay, now there's a really good opportunity to buy Ethereum. And in fact, we also, in one of our updates, said that the Ethereum will be the key to the kingdom. Bitcoin is the king, but Ethereum will be key to the kingdom. And what we mean by that is we believe this will be the true sign of when altcoin season will actually kick in. So a lot of things are starting to line up for Ethereum now. And, one thing that we see here now is there's Ether treasury firm BTCS surges 100% on $100 million Ethereum buying plan. So they've come out, they've stated they're going buying and have actually bought $100 million worth of Ethereum. And off the back of that, their share price pretty much doubled. But they're not the only ones in town. So we've seen this. Bitcoin has Michael Saylor. He's out there. He's buying it pretty much every week, buying absolutely loads of it, convincing others to do the same. What's been happening with Ethereum? Well, Ethereum is now pulling together its own group. So 4 public companies just made major Ethereum plays, and it's getting impossible to ignore. So already mentioned BTSE surged 100% after unveiling a $100 million Ethereum accumulation plan, and they've stated they plan on buying much more. SharpLink have been doing this for a few weeks now. They now hold 205,000 Ethereum, second only to the Ethereum Foundation. They also too have stated they plan on buying much more. GameSquare launched 100 million Ethereum treasury strategy backed by DeFi powerhouse Dialectic. And on top of that, we've got Digital flipped its entire Bitcoin stack. So it had a big stack of Bitcoin, has sold those and have bought into Ethereum, buying over 100,000 Ethereum as well. So there's real momentum starting to gather. It's not hype, it's a coordinated shift. And of course, we have, why is this happening? Well, staking yields and the rise of on-chain income. GameSquare, one of those companies, is targeting 8 to 14% per annum off the back of just staking this, not to mention the potential upside on the token itself. Tokenization narrative gaining steam across TradFi. So TradFi are really looking at tokenization. And of course, there's a growing conviction that Ethereum is the financial base layer of the future. And so there's now big bets being made by institutions and corporate into the Ethereum ecosystem, something that wasn't happening. The total focus seemed to be on Bitcoin. The Bitcoin ETF was flying, Ethereum not so much. Now the Ethereum ETF is really going strongly as well. And now we're seeing the institutions and the corporations starting to move towards it as well. So basically what we've seen happening in Bitcoin before now appears to be happening with Ethereum and happening in a really large way. So Ethereum is starting to move, and that's important. And with that, we have the Ethereum co-founder, Joe Lubin, is now leading the board. This isn't a half-hearted pivot. And this is speaking about, what's happening with GameSquare. Now BTS is blending TradFi and DeFi. Is raising capital through equity and the convertible debt, which is TradFi, and Aave, which of course is DeFi, and all to stack Ethereum with minimal dilution. We've seen this before. Again, it's what we've seen with the likes of Bitcoin. MicroStrategy kicked off the Bitcoin treasury wave. Now it's Ethereum's turn, and it's happening really quickly, and it's only just getting started. So we've seen in Bitcoin, now we're seeing it with Ethereum. Maybe there will be others, but these are certainly the absolute leaders. And Ethereum, as we've always said, is really important as to when we feel that the altcoin season will absolutely kick into gear. And I believe that will happen when Ethereum starts hitting all-time highs and that the public are back into the market. So far, it seems to be both Bitcoin and others. It's institutional, it's banks, it's governments, it's states and so on. So that's going to start happening with Ethereum as well. It's going to raise its price, and then I think we start to see the individual coming into the marketplace, and that is what we think will create the altcoin season. So market positioning, well, as we mentioned, Bitcoin hit an all-time high. It's liquidated a lot of shorts. It's hit 112,000. It's holding pretty well at 111,000 right now. So it's done really well. Where to from here? Is it going off to all-time highs, or will it take another breather? We'll see, but it's been a lot of sideways chops so far, so it's built a good platform. So it has the potential to really go to all-time highs and further. Let's see what happens over the coming few days. So, but if you were to follow this and the global into supply and Bitcoin, this is the white line is the global into money supply 3 months in advance. So in other words, Bitcoin is following that 3 months behind. And you can see that it's tracking it really, really closely. And if it continues to track it, it's going to be upwards from here, moving towards 140 to 150,000 Bitcoin value. Is that going to happen right now? If we're to follow this money supply, the answer would be yes. But what about altcoins? Are altcoins in the same way? Well, we can see here, there's indicators here that show when altcoin season is. It's when it's over 75 based on the altcoin index. At the moment, it's simply at 20. So there is a huge amount of road to run. Altcoin season is not here yet. When will it come? Will it come for all altcoins? Will it be different from before? We believe so. Then we've got Julian Patel, who works with Raoul Paul at the Global Macro Investor. And here's how they see the overall marketplace right now. So according to their Bitcoin cycle top finder, you can see here that the 4 peaks here have coincided exactly with the highs of Bitcoin in the last 4 highs. As you can see in this chart, the black line is absolutely nowhere near where it needs to be to signal that we're in that altcoin season, or that it's hit. So there's a long way to go. So in other words, many people have asked, are we going to have an altcoin season? Have we already had it? If we haven't had it, are we going to have it? If we are going to have it, when's it going to happen? And is it going to be for all? And the answer for that, for me, is I'll come to it in just a second. But, there's lots of positive news out there, again, about crypto in general, about Bitcoin, about Ethereum, and about many more, and what's being created out there. However, Bloomberg's US Economic Policy Uncertainty Index is hitting nearly its highest peak it ever has, far outstripping where it was in the dot-com bubble, much higher than global financial crisis, and very close to the COVID-19 pandemic. So this trade policy uncertainty is creating, uncertainty in the marketplace, uncertainty around the economy, and uncertainty for businesses. And so lastly, the S&P 500 is green on the year. So the S&P is doing well and momentum is building, but that resilience is about to be tested. A Fed on pause. So in other words, it's not reducing interest rates, which many people have been, saying it's going to happen at the end of last year, then the start of this year, then the middle of this year. And so far it's been, the Fed have been on pause, on pause, on pause. Softening corporate confidence, touching that, and a shaky earnings expectations suggest the next leg of the bull run could be harder to sustain. So one thing that I can see in the market at the moment is there's massive uncertainty. There are some of the best minds, the biggest banks, the companies with, the experts in the area, the smartest minds. One day they're saying, oh, we're going to have economic issues. We're going to have a recession. We might have stagflation. And really, within a couple of weeks, they're then saying, no, economy is doing great. The S&P is going to fly it for the rest of the year. We're going to have a very positive year. And this is flip-flopping on a very regular basis by the same people. So what's causing all of this? Well, ultimately, I believe it's like this. We have a situation where the economy itself is split in 2 parts, and so is the investor relations and who's investing, how they invest, and the companies they invest in. So on the company side, we can see the S&P, not just the Magnificent Seven, but most of the S&P is now starting to do well. Despite all the uncertainty we had, the potential for World War III, the tariff uncertainty, spooked the markets, but it's all done well since, and the S&P is moving forward strongly. On the other hand, we have the general, ISM index and the, small to medium enterprises, and we can see that they're struggling. They have a negative view of the future, and they think that there's going to be many challenges ahead and that there could be an economic recession coming. The S&P, they're talking about all-time highs and moving strongly into the future. We have the people who invest into the stock market, and that's about 10% of the population, hold about 90% of the shares in the S&P. They are positive about the economy and positive about their financial position, they're the ones doing the spending. On the other side, you see about 90% of the population who are struggling to make ends meet, who are faulting on debt, both student loan debt, credit card debt, mortgage debt, car loan debt, huge amount of delinquencies and all. So we have small to medium enterprises struggling. We have 90% of the population struggling. On the other side over here, we have 10% of the population are happy because the S&P are doing really well. And they are, the ones that do the vast majority of spending in the economy. And of course, the consumer economy is about 70% of the overall economy. So while they're happy and the stock market's doing well, they're happy, they're spending, it's keeping the economy afloat, despite the fact that there's a lot of pain being felt out there. How does this all change? Well, one or two things have to happen. Either the people over here start feeling like they're doing well again, and business start doing well again, which would seem pretty challenging at the moment for that to happen. Or on the other side, the stock market starts to wobble and in fact has a retracement. And if that were to happen, then the spending being done by the 10% suddenly don't feel quite so safe doing the spending. They reduce their spending. The economy starts to suffer and we have a circle down. Will that happen? Of course, nobody knows.
So my base case is that there's every possibility we reach all-time highs. Many believe we could go to 118 to 120,000 by this weekend.
Of course, that's absolutely possible. But I think there's a flush out to happen through the summer yet. And why I think that is there's a number of reasons for that. But one of them is because the big, beautiful bill has been signed in and there's going to be 5 trillion more debt allowed. The government have been using their savings all around to spend because they weren't able to increase the governmental debt. They've been given the green light to do that now. And so that means they're going to go out and sell treasuries, huge amounts of them. They're expected as about 850 billion worth of treasuries. The more treasuries that are sold, the higher percentage they're going to have to offer for more money to come into that. So the percentages increase. It encourages people to move from the stock market into those stocks and bonds. Stocks and bonds price goes up. This is contradictory to what the government want. It's going to make their debt more expensive, but it also pulls a lot of money out of risk on assets like the stock market and like the likes of crypto and so on. So I think we're going to see a sucking of liquidity into that for the next couple of months. And then once that's filled and our coffers are filled again and they can reduce the level of treasuries and bonds that they're selling, then I think we see a steady in the market. Hopefully by then the whole news around the tariffs will have come to a positive ending. And then I think we could see the market start to move in a very positive way. So from here, will Bitcoin go up? Will Ethereum go up? There's every possibility they go up, but whether they go up to, the likes of Bitcoin goes to 180 and 120 and then has a pullback or pullback before that, who knows? But I think we're going to see a breather there. But ultimately, where's Bitcoin going to go in the longer term frame? I think it's pretty much up only. Of course, you're going to have the up and downs, but I think it's up only. It's going to go to hundreds of thousands. At some point in time in the future, it'll go to 1 million or more. Ethereum, I believe, will do extremely well in the same process, though again, it will have its pullbacks along the way. As for the altcoin season, well, that's for our group, and I'll go into that in more detail as to what I think will happen there. Hopefully you found all that useful. We'll talk to you all very soon.